Today's webinar is on mortgages for the self-employed. So what I'm going to do is I'm going to just spend maybe 10 to 15 minutes just kind of going through the important things that you need to know about when you're doing mortgages, when you're helping people buy and sell real estate and they're self-employed. And I'm also wanting to take questions from the group. So if you do have a question, I'm sure you guys are all really familiar now with webinars and Zoom and stuff like that. Just write me a question, like if something pops in your head while I'm giving this conversation, then just write the question and I'll take care of it later. So let me just make sure once again that Zoom is working the way that I want it to. I'm pretty sure it is. Okay, good. Okay, awesome. So one of the things that you may say as a real estate agent, well, it's not my job to take care of the mortgage financing, and I think that's true. But whether or not your customer is buying their first house or buying and selling, what we find, and I've also read some interesting research about this and information about this, is realtors who have sort of a good handle on what happens with the mortgage financing end up, one, looking more professional, right? But also can understand the nuances of mortgage financing to help their clients kind of get through the process. So one of the things that I really find helpful is if the client wasn't referred to me through a real estate agent, I'm always asking the client, the person that I'm helping with financing, to introduce me to the realtor so that the right hand kind of knows what the left hand is doing. And so again, stats show that real estate agents who have sort of a good handle on what's happening with the financing and the client's financial situation end up, one, looking more professional in front of the client, but also that helping that client through that transaction. And I know we're all working towards the same thing, which is helping that client kind of get to that ultimate goal to buy their house, but also to make sure that they have a smooth sale. And what you're going to be finding, and there have been more and more people now who have maybe transitioned with their job because of the pandemic, and also there are changes in employment status. So we've worked with clients that used to be T4 employees for large corporations, and now through the changes of the pandemic, or just through the changes with how the corporation is doing business, they have now transitioned from having that person as an employee to a subcontractor. So when that ends up happening, now you're dealing with a self-employed individual. So what I thought I could do for you today is just kind of talk about some of the most important questions that you should be asking your clients, and some of the red flags that can come up, and then how to deal with those. And what I thought you could do, so here's a little script. I don't know if you guys like scripts. I kind of sometimes do. You know, one of the things you could be telling your customers is, I just attended a seminar, and one of the things that I've learned is it's more and more challenging for self-employed individuals to get mortgage financing. So before we start looking for that house, I just want to make sure that you've had the opportunity to speak to your mortgage professional and you've gotten the financing sorted out, because when we need to put an offer on a house, we're going to need to act fast, and I need you to get the finance. I need you to make sure that you're going to have your financing in order. A lot of people may be embarrassed about their own financial circumstance, but I don't think that there's anything to be embarrassed about. The other thing that you might find is that people, like banks, I mean, we do mortgages as mortgage brokers for TD and Scotia, but banks aren't, TD is no different than Scotiabank, which is no different than RBC, which is no different than Bank of Montreal. So because they all have to follow the same regulatory guidelines, and really they don't have a ton of wiggle room. As I said, I know this from firsthand experience because I do mortgages as a mortgage broker for TD and Scotia. They are very strict about self-employed individuals. So again, if you have a client who's had some financial difficulties, and I'm going to kind of go through that with you, you may be they may be better suited with having a referral to a mortgage broker. So most financial institutions, some of the ones that I've mentioned, require clients to have a minimum of 2-year self-employed history. So what they're going to be looking for is completed tax returns for 2018 and 2019. They'll want notices of assessment from Revenue Canada for the last 2 years. And they're also going to want to see that there are no outstanding income tax returns, no outstanding CRA debt. So again, most charter banks, I think all charter banks will want to see 2 years worth of income tax information. Now, there's different categories of self-employed people. There's those people who own corporations and pay themselves a T4 and a dividend income. They're still self-employed even though they own a corporation. And then there's business for self people who are sole proprietors. And then there's commission sales people like you guys. You would be in a separate category. You wouldn't be considered business for self. So realtors or individuals who are 100% commission sales are in a separate category. So, so some of the things that you need to be aware of when you're talking to your clients is, and here are the red flags for you, is this is when you know you need to send them to a mortgage broker, is the first one is, you know what, I have a great business, I make hundreds and thousands of dollars a year, but I don't show a lot of taxable income, okay? So clients who have good net worth, you know, good businesses, they may have corporations, but they don't show a lot of taxable income on their personal tax returns. This can be really challenging because many financial institutions are not looking at net worth, because I often get this pushback, well, I've got 500,000 or I'm worth like 1.5 million, but I only show $20,000 worth of taxable income. How come I can't get a $500,000 mortgage at my bank? Because net worth is different than debt ratios. So that is a really important thing, because one of the things that we can look at is if the client does have a sustainable, strong business, we can actually look at 6 months worth of business bank account statements and piece together their income that way. So if they're only showing, for example, $20,000 worth of taxable income on their personal tax returns, but we can stitch together maybe $100,000 or $150,000 worth of income by looking at their tax 6 months worth of bank statements, then that's a file that we can absolutely get done. And how it's going to help you as a realtor is, instead of them maybe buying for $600,000 or $700,000, now we can kind of get them closer to the $1 million category. Obviously, these clients would probably need to have about 20% down, but most individuals in this category, I find, have at least a 20% down, either if they're buying and selling from the equity in their house. Another kind of red flag for you that you can, and I'm going to check to see if we have any questions. We've got 13 participants, which is awesome, but we don't have any questions yet. So you send me those questions, I would appreciate that. The next red flag is, I've had credit issues in the past, but it's all cleared up now. And one of the reasons why that's a red flag is that most banks, well, all banks, require that you have stellar credit. And you know that earlier this year, there were some changes to credit ratings and minimum credit scores for insured mortgages. You know, we're looking at a minimum of FICO score of 680 now. Right? So if they've had credit challenges in the past, and their credit just hasn't been repaired, or if they thought they've repaired it, that could be a red flag. Like one of the things that we do is we do a credit check, and we have a direct line to Equifax Canada. So we immediately know what their credit score is and kind of what the issues will be. I also wanted to let you know there are some excellent alternative lenders there who will do financing for people who have bruised credit. And again, we're talking about clients now who have a minimum of 20% equity as a down payment. There are options for people who have less money down. But so for example, right now on a 5-year fixed rate mortgage, you'd be looking at under 2%. For people who have bruised credit, especially those maybe who are self-employed, you'd probably be looking at somewhere in the high 3s to low 4s on a 1 or 2 year fixed rate mortgage. So that kind of gives you an idea. But most people who are self-employed have good cash flow, and they're like, hey, I can get myself into a house. Maybe I need to amortize that mortgage over 30 years instead of 25 years. And that will kind of help keep the payments low. And that 1 year or 2 years that we do for them may help them to kind of turn the corner and help them repair their credit history. If they think they've repaired it and it's not where it needs to be, mortgages now appear on people's credit bureaus, so that's an interesting thing that can help them with their credit score. The other kind of red flag that comes up is I haven't completed my taxes for okay. So, I mean, we're getting into the fall. You're probably, come October, November, we're going to be talking to all of our clients, especially those who are thinking about buying in the spring 2020. And those clients who are self-employed, we're going to really emphasize getting their income taxes done early, right? And the reason for that is if they haven't completed their income taxes, they're probably looking at a private loan. Okay, just to kind of give you an idea, right now 5-year fixed under 3%. Actually, it's under 2%. People with bruised credit, maybe not showing a ton of taxable income if they own corporations. High 3s, low 4s if they've got problems with their credit. Private mortgages now are in the area of 8 to 12%, right? So I always, some people are really hell-bent on getting that house, and we can help them, but it's a lot of money to spend if they don't have their income taxes done. We also have access to a couple of really good accountants and bookkeepers at our office. Obviously, we wouldn't, we're referring them out to our network. There's not a financial gain for us, but the gain really is to help people get into a home. So that's kind of another red flag. So again, the fourth red flag that you see when you're talking to your clients is I have some outstanding income taxes that I still need to pay. Because all financial institutions are going to want to see that any of their CRA debt is paid to zero. And people say, well, why? I only have like a few $1,000s to CRA. Like we've helped people who have a few $1,000s to people who have $50,000, $70,000 that's owing to CRA. And the reason why financial institutions want that to show that that's paid to zero, because the people will probably never default on the mortgage, but if there's a default, what happens is the pecking order of how things get paid is CRA gets paid first if there's a default, then property taxes, and then third the mortgage. So one of the things that we need to make sure is that CRA is paid to zero, especially if it's a larger amount like 5, 10, 20,000. For those clients who have CRA debt or are struggling to pay that off, one of the things that we could do is just a private second mortgage for them to help them clear off the CRA debt so that if there's a lien against their property, they don't have that lien when they sell the property. Or what it also does is it relieves a lot of strain from the borrowers. Like I find that CRA, I think the interest rate on a CRA debt is somewhere in the area of 20% or higher, whereas we can get them into a private second mortgage at about 10% and clear off that CRA debt. So the reason why this is important is because if you are working with somebody who is buying and selling and they have outstanding CRA debt, that CRA debt, it would be very good for them to clear it before they get the next financing for the next house. So again, if you have people who are thinking about moving next year, are struggling with paying off CRA or haven't paid it off in zero, this is now a good time to have their conversation. And I mean, you don't really have to have that conversation. You can just refer them to us and we'll kind of walk them through that process. The other kind of red flag, and this is the last one, is I just started my business 2 years ago. Can I buy? And the answer is yes. If they have at least 15% down, we can help them with a purchase, because there are some, they're not financial institutions, they're kind of in between financial institutions and mortgage investment corporations, or financial institutions and private lenders. They're called mortgage investment corporations, and they will lend to people who have been self-employed for less than 2 years. And then the answer question to that is, well, how do we confirm income? And again, we would need 6 months to 1 year's worth of banking history for that business to confirm their taxable income. Okay, so again, if I could just wrap things up for you, some of the kind of the red flags that we've talked about, I don't show a lot of taxable income, right? There are some really good programs for people where we, again, use bank statements. I've had credit issues in the past, but they're all cleared up now. Even if they're cleared up, their credit history may not be where it needs to be. We want to make sure we do a credit check up front so we know exactly where they stand with their credit history. You know, like if they've been turned down by their bank or discouraged by that, you know, don't send them over to us, because I'm sure that there's something we can do to help them, because there are financial institutions that will do transitional type mortgages until that client has cleared up credit history. I haven't completed my tax returns for the last year. You know, they are going to pay higher rates, significantly higher rates, if they haven't completed their tax returns. Some people just have to go down that path and we can help them. But we also have a good network of people that we can refer so that they can get their income taxes done. Speaking of income taxes, we want to make sure that those self-employed individuals are all caught up with their personal income taxes. And if they have equity in their home before they sell their home or before they put an offer on another house, we can help them pay off that CRA debt through a private mortgage. And then the last kind of red flag that I see is, I just started my business 2 years ago. Can I still buy a house? And the answer to that is yes. Yes, if they've got 15% as a down payment. I do have a question from Mike Matheson. A shout out to you. The question is, there seems to be many properties that have sold firm and then cannot close in the 2 to 3 weeks, and they come back on the market. Assuming there is suddenly a financing issue, how are some of the issues happening after they've been approved at the bank or the mortgage company, other than buying on credit before closing? I'm not sure. That's an interesting, a huge problem, because what that tells me is that like the due diligence that's required up front, Mike, and to all of you who are attending, is not actually being done. So you know, I don't want to say buyers are liars, but but you know as well as I do that things get kind of sloppy, and sometimes the borrower doesn't provide good documents up front so we can understand their income. And I think everybody's sort of in a rush to, you know, put an offer. So like, that's where I'm saying to you guys as realtors, if you have somebody who is self-employed, before you even start looking at houses, make sure that they've done their done their financing, and that their mortgage professional has done a really good job at reviewing their income documents. So The other thing I also wanted to let you know, and you probably have seen this too, Mike, and that's your kind of comment about closing in 2 to 3 weeks. That's kind of with COVID and the pandemic and the extra due diligence that's required. I mean, closing in 2 to 3 weeks is a miracle. Closing within a month is a good time frame. So like if you have an offer, the offer is accepted and there's 30 days to close, but closing within 2 to 3 weeks, it doesn't make sense because one, the lawyer needs at least a week to pull things together. And then the second challenge with that is we'll need an appraisal on the property. And then the third challenge is the lenders are all pushing back going, why do we have to close this in 2 to 3 weeks? Right, what else is happening? Is there any fraud that's happening? Thank you, I hope that answers that question. The next question I have is from John Vanderstoop. Thank you, John. I have been commission salesperson for 5 years, but I'm transitioning my realty work to a professional corporation next month. How will this affect my eligibility if I want to buy land now? Well, buying land, John, in the best of times sucks. Most financial institutions will require a 50% down payment. And the only institution that I can think of that will, RBC will loan to 50% loan to value. Meridian Credit Union, we work with Meridian Credit Union, will lend to 50% loan to value. But if you're putting anything down less than 50%, and if the land is not developable, like if it's way up north, you're probably looking at private financing. So your transition from commission salesperson to corporation is not really going to be affect the financing because you're probably going to need to have private lending anyway, unless you have 50% down. The next question I have is Mike Matheson, but the mortgage company usually is supposed to do those checks with their client. Okay, Mike, I think your question relates to the first one that you said is like the mortgage company is supposed to do those checks. And I would say, yes, I would agree. They are supposed to do those checks. So why is there a problem on financing? What I would recommend to you, Michael, is make sure that to avoid these kinds of problems, that you loop back to the individuals helping the financial institution, like loop back to the individual or the financial institution who's doing the financing to make sure. I know we have to babysit people all the time. I know it's like babysitting, Mike, but I think that's how that would be avoidable. Let's just see what other questions we have. I have a question here from Christine Brady. How are lenders treating the 6 months of COVID income, CERB or other stimulus, or reduced income in their overall approval for self-employed individuals? Yeah, you know what, that is a challenge because if there hasn't been any income in the last 6 months, you're probably looking at the borrower postponing their purchase, right? Because if they're, for example, a restaurateur and haven't had their restaurant open for the last 6 months, that is going to be a challenge for them purchasing. So yeah, CERB income is not considered income. It's like they're on unemployment insurance, so we can't use that. Just to kind of change paths, just to change paths a little bit on that one, Christine, because I'd like to address that because many self-employed people have had to look at some sort of social assistance. They're probably looking at private financing or doing a segue mortgage. So if their business was shut down in the last 6 months, like we can look at past history, but they are probably going to look at alternative financing. And then I do have another question from John related to you purchasing land. John, you can. Why don't we take this offline and we can connect via email and schedule an appointment, and I can answer any specific questions you have. So I think that wraps things up for today. I mean, we've been at this for about 30 minutes. And just in wrapping up, what I wanted to let you know is be proactive and don't be complacent with the financing piece. You really need to make sure that you feel confident about your client's financing. If you are not, or I would say as a rule of thumb, reach out to the person who's doing the financing. I appreciate your feedback. I love helping realtors, and I love helping people with financing. Where you can offer your feedback is if you just Google the Mortgage Center Guelph. You can do a Google review. And then for those of you who would like to kind of talk about your own specific situation, I'd be happy to do that. You can actually set up a telephone appointment or an online appointment with me by just going to my website at skipthebank.ca. That's skipthebank.ca. And you can click a button there and it says schedule a one-on-one appointment, and we can take it from there. So. You guys are awesome. Thanks so much for joining us, and we're going to continue these. If again, we're here to help. Where you can reach me is through skipthebank.ca. You can also follow us on Instagram and through Facebook at the Mortgage Center Guelph. Guys, have a great day. Thanks so much. Bye for now.